Hello, welcome to this video, Dave, which is our weekly Forex forecast. Now, it is the 12th of February and it's Saturday. Now, in this video, we're going to pick out some of our favourite pairs for the week ahead, which we think could offer the potential for good risk-to-reward trading opportunities. We've got quite a few charts to look at, and we'll go over them in just a moment. Now, the week ahead could be an interesting one. It could be a volatile one. Now, in terms of last week, we did see quite a bit of spiky price action, but we did have some decent volatility. Now, in terms of also in this video, what I want to discuss is some strategy tips in relation to doing aggressive entries and aggressive take profits. Now, in relation to this, we have had, like I said, a lot of choppy price action. You get a move in your favour very often. You've got a decent profit, then it comes back on you. You lose that profit, maybe even end up at a loss. It is a problem. I'm just going to go through some tips on how we try and overcome it. Now, in terms of the markets, last week we saw US inflation up at a 40-year high. Inflation is on the rise all around the world. Central banks are getting more hawkish. Against this backdrop, historically, you should get higher volatility in financial markets. Also, last week, particularly towards the end of the week, Russia-Ukraine geopolitical problems came a little bit more into focus. How will that unfold next week, and which pairs will be affected? Right, what we will do now is we'll go over and take a look at the trades. Just before we do so, I just need to remind everyone that it is my view as of this specific moment in time. It can obviously change in line with market action. If you want to learn all our trading techniques, check out our strategy and also our daily technical sentiment analysis of 14 Forex pairs. Just go to the link beneath this video and you can check out live access to our member centre. You can also follow our Facebook page and join our Facebook group of over 900 traders if you wish, and swap ideas. And finally, you can check out our recommended regulated ECN broker. Now, in terms of the trades and the opportunities, I've been doing some work in our member centre, so I'm going to use the charts from there. So let's go and check them out. Right, on the chart of Euro USD, anyone new to our videos, you can see our technicals are kept very simple. Now, in terms of technical levels, we've normally got, well, we always have, sorry, a bias from the sentiment behind the chart first, which allows us to keep the technicals simple. We only want big levels, which we think matter to key institutions. Now, in terms of the rally, it's a big rally up towards the 115 level. On the view, the ECB could hike rates 4 times this year. We think that's unlikely, and we'll take an aggressive entry on this red candle here, and we fall to the downside. Okay, now in my view, Euro has got more downside to come, and I'll show you how to play this trade if you wanted to get into it. But before I do so, I just want to look at some charts in relation to the sentiment behind the move to the upside and why we thought the move would fail. Right, let's go and take a look at the charts. Just a few charts and a few comments in relation to the outlook for Eurozone interest rates. Now, in terms of the perception, you can see it on this Bloomberg opinion chart of the markets. After the ECB meeting was they'd hike 4 times, okay? Now, this quote here, at the beginning of the year, traders were prepared to believe Lagarde, that's Christine Lagarde, the ECB president, when she said that even one 2022 rate hike was unlikely. Now they are braced for 4. I think the market took the ECB as too hawkish. I want to come to some comments from Christine Lagarde after the meeting in a moment, which shows she's still pretty dovish. So they did have to acknowledge high inflation at the meeting. They're a central bank. That's part of their mandate. But they do not want to raise rates 4 times, in our view. We don't believe they can. Now, in terms of before you can even do rate hikes, you've got to reduce stimulus and asset purchases. And this is the ECB balance sheet. It's expanded at a really rapid rate, accelerating in 2020. A lot of people talk about the size of the Fed balance sheet, but in terms of balance sheets against GDP, Eurozone's is far bigger. Look at it up here, the dotted blue line, the Fed, the white line, down the bottom. Now, in terms of asset purchases, that's to provide liquidity and support for the poorer nations of the zone. Can they withdraw that support quickly? My own view is they can't. I'm just going to go to Christine Lagarde's comments after the meeting. Now, bond yields went up. That means higher yields for debt. You can see my highlighted text here. Responding to sharply higher yields for debt in the bloc's periphery. That means the poor nations zone, Italy and Spain, etc. Since the ECB's policy meeting, Lagarde said the ECB is ready to intervene if needed. That's to force bond yields down. Now, how do you do that? That means more asset purchases, doesn't it? That's the way you do it. And she makes this point here. We will use any tools, any instruments that are needed in order to make sure that our monetary policy is properly transmitted. To us, that means asset purchases if necessary. Also here, this quote, there is a defined sequencing between the end of our net asset purchases and the lift-off date. Can't raise rates before asset purchases end, and Lagarde said a rate hike will not occur before our net asset purchases finish. And they're not going to finish soon. Obviously, the Fed will. And she makes the point any adjustment to our policy will be gradual. Okay, so that doesn't sound very hawkish to us. We think 4 rate hikes from the ECB this year. At the moment looks a little bit optimistic. Right, let's go back to the chart of Euro USD. Right, back on the chart. Now, just want to make reference to our video, our last forecast a couple of weeks ago. We were actually trading the euro short. We got in based on this red here. We followed it down, half off on the blue, then half off when we penetrated this big red here. I thought decent profit, look to resell. I missed all of that move up, okay? But you're always going to miss moves in Forex trading. And a lot of people I know came in on this candle here at the top looking for follow through. No risk to reward for us. We want to look for a reversal. We get it. And we're not down much. We're down about 80 pips. But I think there's way more downside to come in this pair. So how would you play it? My own view is if we bounce back to 114 and the top of this red candle, look to sell weakness off it. If we go through here, make a new low in the new week, I would just sell, okay? If we do make a new low, we'll bring our stop down to 115.20. We've got a really nice red. It'll probably come in behind the high. I think there's a lot more downside. I've got 110, then 105. I just want to show you the monthly chart. You've got daily lows in between, okay, which are here, okay? Then the big support on this cluster of candles here at 110. Then down to 105. Now, just feel it's not only the market is overestimated how quickly the ECB will raise rates, they're underestimating how quickly the Fed might. Also, you've got Ukraine-Russia tensions in the mix. You can see it in my search up here, Biden and Putin phone call. It's taken place, but can't find any news about what was said or how they viewed that meeting, but it's looking pretty serious between the Ukraine and Russia. Any conflict, the euro will get hammered. Why? Obviously, energy. Russia is a major energy supplier to Europe, particularly Germany. But even without that happening, I think the euro going a long way to the downside. Now, let's have a look at a couple of euro crosses. I want to look at euro JPY first. We're on euro JPY, and in terms of the euro, it surges up on the JPY and gets the 133 level, testing previous chart highs back in October, and we think that's worth a sell. Now, in terms of the yen very oversold. Generally, speculators are heavily short the yen, but the yen does tend to do well when you get a bit of risk off or nervousness in the market. We got that over the Russia-Ukraine thing. Also, stock market weakness, high inflation. We just felt you poked the round number, euro poked the round number just through, no more buyers, and we ease back, so we just sell. It's also within an outer Bollinger Band, the orange line here. And when they're wide and there's high volatility, we very often will sell back within the outer Bollinger Band, and we get a nice fall to the downside, 160 pips. Now, in terms of aggressive profit taking, regular viewers know what I'm going to say. If you get a decent profit in a short period of time, why not take half? You've got 160 in the bank, still in the trade, okay? You can always come back in, okay? Now, in terms of this one, if you wanted to come in fresh, how would you do it? Well, if we rally back above the round number here, 131, we're just beneath it, you could sell back through the round number and look for this level of resistance to hold. Or if we broke that level of resistance, you could look at this level of resistance to hold and sell back through this one. Okay. If we don't rally, just look for a lower open away from the round number. So I'm going to say 130.80, and I think we could well go to chart lows. Now, talking about aggressive entries, that one went right, but they do go wrong. I'll give you an example. We had a short in from this level here, off that level, and basically we did come down really nicely. On the last forecast, took half out near the bottom, the other half comes out on this big blue here, or biggish blue. Then we moved sideways, then we came up before the ECB, and we just came off the 130 level, the round number, and I thought that was worth a sell. Okay, it didn't work out for me. We lost, I think, 80 pips as we blasted through the round number. So sometimes, obviously, it can go wrong. But if you use aggressive entries, you're not risking much against your potential reward. Okay, so yeah, that's Euro JPY. Now, what I want to look at next is my favourite pair, which has been for the last few weeks, actually. It's not a euro pair. It's a euro proxy against the USD. A lesser looked at pair. It's USD CZK. Now, in terms of the CZK, Czech krona is a euro correlated currency. If the euro gains strength, that will strengthen very often the krona. If the euro weakens, it'll weaken the krona. We've been interested in this one for a good while, so just go through how we've been playing this trade. Saw this big fall here in the USD, and the reason it fell was market looking for very aggressive rate hikes from the Czech central bank. We thought it was overdone, and this blue tail here indicates exhaustion for us, new low and a nice strong finish, and then we work our way up, okay, and we popped our stop behind the 2180 level, got stopped out. It was a decent profit, and then look, we fall down. Been nice to have sold it, wouldn't it? But that wasn't our view, so we waited, and then look at this tail here, pokes through the previous tail, then finishes off the low. So we come in on this blue here, then we work our way higher with a big blue on Friday. Okay, so nice fast moving pair. I think there's way more upside in the USD. So again, we bank 50% of our profit. The other 50% runs, we can't lose on it, but if we've got good profit in the bank, we can put it back in on a dip to the support levels or on a new high. Dollar so oversold, we should go up to 22.40. In fact, the Czech krona is overbought everywhere. It's even overbought on the euro. So saying to Euro bulls, if you fancy the euro being strong going forward, why not buy the euro on the Czech krona? She's moved up okay. She gets through this level, 24.60. She should run up to 25.20. So again, you could buy dips to support, okay? It's always good to look for a currency that's just overbought everywhere. And you look at the Czech krona and other pairs, it's overbought, okay? So that's our view of Czech krona. Now I'm going to go to USD CAD, which I covered in last week's video, which I featured CAD pairs just on their own. Very messy price action. Had long up, and then we get stopped out. We go long again. Look at this from messy price action. But what you can see is the USD is holding support levels. We had a brief poke through there at a second, then we're off again. There's no difference in terms of our entry to the price now, really. It's about 12, 13 pips. Well, it's 13 pips. But I think USD is getting ready for a rally to the upside. And everyone's saying about Canada, crude oil is firm. But I think the market now, that's it in the price. If you look at what we've had recently, sort of choppy, messy, sideways action, well, crude oil, look at it on the monthly chart, 3 strong blue candles up at 93.88. It might even get to 100. That's what the market's thinking, but I don't think that's going to help the CAD. Okay, so I like this pair. Sorry, I've gone to the wrong page. I like this pair, and I like it for a move up to chart highs, then monthly resistance of 130, maybe even 135. So 300 pips to our first target, 800 to our second. Second's an ambitious target, but I think, you know, in terms of Canada, market's expecting them to hike more aggressively than the Fed. We don't share that view. Also, we've got the slowing global economy, potential for risk off. They're both bearish for the CAD. I'll just show you the monthly levels. So if we looked at USD CAD, you can see we're just kind of sideways, just below this 20-month moving average. If we take it out, well, 130 is a big resistance level, but you could get to 135 with risk off. But if you got to 130, we would be happy. Now, in terms of the next pair I want to look at, I want to look at a few more CAD pairs. So I'm going to look at GBP CAD next. GBP CAD, CAD most overbought major in our view, and we think pound is going up on all commodity currencies a long way. Now, if we get risk off, the pound will get an additional boost to the upside, but even if we have risk on, we think the pound is going up. Now, in terms of the price action, kind of messy, but that blue here on Thursday takes out the 172 level. Friday we settle above it, so we're above one round number, beneath another. You can see we're in early at 71.80, stop at 71.70, we lose 10 pips if we're stopped out. But we want to add to this trade, and this is also for fresh positions. Get above 173.20, and I think we'll gravitate up to 176, then up to the top of my computer screen at 180. Now that is an ambitious target. I've said it before, your ambitious targets don't always come off, but when they do, makes a big difference to your bottom line profits. So I just want to go to a pair which we've covered in all our forecasts for a good few months. We became bullish of the GBP when it broke above 190, and she moved sharply higher. Okay, we had a good few trades in there, got a good chunk of the move. We did get stopped out recently on that move down. Okay, so this candle coming through here stopped us out. We get to the 20-day moving average. You can see how it's supported price in the past, and we think just through it, we can buy back above it, which we do, and then we follow through to the upside. So, yeah, basically you're at the 203 level from 190. That's what, 1,300 pips, and we still think there is another 600 pips to come. You can see our target. So if you wanted to come in fresh, just buy above the high or dip back to support. Okay, now in terms of next pair I want to look at, AUD CAD. AUD we think will be the strongest of the commodity currencies. Now in terms of this, we had a big fall and then we come up. Okay, so we take a long, we do get up quite nicely, but then get stopped out on that red tail. It's only 100 odd pips. Okay, but I just think this is a buy through here. Okay, so you can see my level, 91.15, not much risk, 99.99. I meant 90.55. I'll correct that type. I'm sure people know what I mean. Target 93. This trade is loaded with speculative shorts. You can see the risk, and you can see the reward. So I think it looks a really decent trade, actually. So yeah, so we like the look of this one. And my final pair, it's another CAD pair actually. Going to go to, sorry, where do I need to go to? I need to go to CAD JPY. So we're on CAD JPY. Now the price action, this one doesn't look too exciting. In previous forecasts, we were just traveling between 90 and 91. I was saying sell a break of 90, but we pop above the 91 level. We think the breakout will fail. So we just come in aggressively as we ease back from the high, and then we get a red back through the 91 level. Now, and again, an aggressive entry. Price action doesn't look that exciting, but this trade is loaded with spec CAD long. So I think the volatility could well pick up to the downside. It's an aggressive entry again. Now we can bring our stop down, just risk 40 pips. Now we've only got 50 pips in open profits. So it's not worth even taking half. But I like the look of this one. In terms of you playing it fresh, you could just take a new low at the open of the new week. Or if we get back above 91, you can just sell back through the level. I think the amount of specs that are long points to a move to 86. So basically, what is it, 550 pips down. So you can say they've got an 88 support level in between, which I haven't drawn in. I just feel we'll get to 86. Yeah, loads of specs. I think they could get taken on stop. Volatility could pick up. So there's some pairs to look out for in the new week. Obviously, really, we're focused on euro proxies mostly and short CAD pairs. We'll see what the new week brings, but hopefully we see some decent movement. We'll obviously update next week. But that's our view as of now. Thanks for watching the video. Take care. Have a good day.